Hi guys, welcome back to our YouTube channel AlgoWise. So in the last three videos, we had Molloy and we discussed about how to analyze the markets, the basics of stock markets analysis using the method of fundamental analysis. And in that, we covered two videos also, part one and part two of it. So part one covered the basics, and then in the part two, we had quarterly results and the terms associated with it. All those things we covered in the two videos. And the first video was more of a overview. So I have shared the links of all three videos in case you have missed it in this particular video. And so today, what we'll be doing, we'll be discussing more on the quarterly results and the balance sheet part, yearly balance sheet and profit and loss statement. So we have Molloy with us and he will explain to us in detail. So welcome, Molloy.
Hi, Kalyan.
Hi.
Yeah. So we took Infosys as an example while doing the
Correct.
fundamental analysis, right? So in the last two videos, we have covered a bit of Infosys, and so we can start from where we left. So
Okay.
let share my screen.
Yeah.
So once that is visible, let me know.
Yeah, it's visible now. Yes. So we left off at peer comparison of
Yeah.
IT
So
sector.
yeah. So if
Yeah.
we see here, we covered this part, the return on capital employed, return on equity. This we have
Yeah.
covered. Then we saw the graphs and the P/E ratio, how the historical data can be compared with the current data to understand whether the share is overpriced or underpriced as per the PE median. Then we covered. We have seen that peer comparison part, and now I think we can start with the quarterly results.
Yeah, sure.
Okay. So,
Yes.
meanwhile, Infosys has declared the June 2022 results. Okay. So, while you are looking into the data, if you see here, there are like 10 to 12 quarters data available from September
Yes.
2019 to June 2022. Okay.
Yes.
So, when you are comparing the data, so what exactly you need to look into here? Okay. So, we need to look into the sales number and
Okay.
the net profit, also the operating profit and operating profit margin. Okay, so we'll cover one by one. So when we start, there are two things which we typically look into. Is one is the comparison with respect to the last quarter. Okay, so in the
Okay.
last quarter, we see the revenues, the sales numbers, how it has increased or decreased, and also we the also the net profit also from 5686 to 5360. But to get a more realistic picture, we should always cover and we should always compare the June 2022 with June 2021,
Okay.
March 2022 with March 2021. Okay, so
Okay.
this gives the more realistic numbers how the company is growing from the last quarter last year.
Okay.
Why this is important? Because there are many companies uh, whose orders and those companies are like seasonal companies, and their profitability, their revenues are dependent upon seasons. Okay, so if you compare from one season to the peak season, which we say suppose is a March season, and if you compare that with the June season, then you may find a drop of the revenues, a drop of the net profit, or it may be vice versa. So that doesn't give a realistic picture. Okay, so if you compare with June 2022 to June 2021, then it gives on a year-on-year basis how the company has grown with respect to the sales and profit numbers.
Okay.
Okay, so while looking into this data, it's also important that you look into the operating margins. Okay, so if you see here, the operating margins are from September 2019 to June 2022. The operating margins are fairly more or less constant. From it varies from say 25% to now it's 23%. Okay, so
Yeah. Yeah.
before
Yes.
going further, I'll just show how Infosys has done the results. So if you look into here, in the from the last quarter, from the March quarter, the profit has gone down by 5%, 5.73%. And from the last year, June quarter, the profit has increased by a marginal 3.5%. Again, if you
Okay.
look into the sales number, from the last quarter, sales have increased by 6.8%. But from the last year, same quarter, the sales has increased by 23.57%. So though the sales number are like 23.57% up, which goes well with the company's PYE, which is around 30, okay, which is around 27.8. But if you see the profit numbers, those are a bit disappointing, right? So it's
Yeah,
like
yeah, correct.
from the June 2021 to June 2022, it's only 3.5%. So that from this only you can understand that the company has taken a hit over the operating margins, and which is also reflecting here. The operating margin is 23%. But uh, now we have to understand whether this operating margin will be there, or it can further go down, or it will improve. Okay, so for
Okay.
that you can look into the profit and loss statement. So this is nothing but the same thing. If you like if you take the in a financial year, there are 4 quarters, right? So
Yeah.
if you add the net sales and the net profit, everything for the 4 quarters in an annualized way, like every March we call it the end of financial year, right? So from these are like annualized data for every year, summing up the 4 quarters. Okay,
Okay.
so here if you look into the operating margins for the last 11 years, the operating margins varies from say 33% to 25%, right? So now if you come back to this number, so we can understand that this 23% uh, is not there. It cannot stay forever, right? So it has to
Yeah.
improve, and our historical data says so. If you look at the last 10 years, 11 years data, it's not that even in a single year, on an annual basis, they have reported a operating margin of 23% or below. Okay,
Yeah, correct,
so
correct. So the range is
what
more of from 33 to 25 sort of, and then now it's 23%, which they have reported, right?
Yeah. So what has taken down their operating margin is because in IT companies they have nothing other than the employee wages, which contributes more into their expenses. Okay, so now we know that for the last 2 quarters, the attrition rate in the IT sector increased, and in the big companies, the attrition rate are in the range of 20%, whereas in the mid cap companies, it's like in the range of 30%. So there is a shift in this particular sector where most of the companies have a good visibility for the next 5 to 10 years. That's why they are trying to hire new talents, and everyone is trying to acquire the talents which are available in the market, right? So
Yeah.
when that is the thing, it's actually good for the sector, but it will impact. It will have a momentarily impact, right? So in order to mitigate that, what the IT companies are doing, they are building their bench. They are strengthening their bench. How they are doing that? They are hiring fresh engineers from the college, and then it may take time for them to perform and to give ultimately give add on to the net profit of the company, right? So
Yeah.
typically when these cycles comes every now and then, and when they have already, most of the companies have already hired and increased their bench strength, it's like only a matter of time, say 3 to 6 months, and those people undergoing training will start delivering, and then you will see a certain stabilization of the operating margin, which will be going up in the say in the next 6 to 9 months. Okay,
Okay.
so
Because salaries, the wage inflation has happened, right, in the last 1 year in the IT sector, and that has happened quite a lot. So because of that, most of the IT companies and their salaries are a major component in their expense sheet. So that's why the operating profit has gone down. So that has taken a hit because of the
yeah,
inflation, wage inflation.
that's true.
Yeah. Okay.
So so when you look into the quarterly results, you mainly look into the sales number. You look into the operating profit numbers. you look into the operating profit margins, which are important. The other income is, I would say, though it's good, but it should not happen that the company is reporting a good net profit because of the increase of other income. Okay, so that's why the operating profit is also important. At least what is their core operations, they should have a good operating profit sequentially or year on year basis. There should be a growth in this operating profit number. So
Okay.
if they're adding to their net profit by having some other income, it's okay. But the growth trajectory of the operating profit should be in line with the expectation with the of the PYE of the company.
So in other income, what sort of what are the heads like? Is it like selling some asset or something like that for which belongs to the company?
Yeah, they can sell some physical assets. Okay, so now if they are sitting on their cash reserves, right? So if they are investing that cash to some as an investment, okay, so they will get some return out of it. So
Okay,
those
okay,
everything will come in the other incomes. Okay,
okay,
and if you see the interest component, it's nothing that if you have borrowed some money from the bank, then you need to pay off the interest of the amount of
yeah,
money which you have borrowed.
correct,
So
correct.
that would be the interest component which is here. So it's a meager for say 42 to 56 crores, because in IT companies they are most of the companies are debt free. So this interest component would not hinder their growth prospects and all.
Okay.
Okay, so these numbers are relatively less. Say if you look into a new manufacturing company, there this component can be significantly higher. Okay.
And
And then
depreciation
we
is
have
the depreciation of assets, right? Whatever they have
it's a
acquired.
depreciation of assets.
Mm.
Okay, so from the quarterly results perspective, what is important is that you can monitor the interest in order to understand if the amount of loan is increasing or not, the operating margins, the operating profit, the sales, and the net profit. Okay, so if these numbers show a healthy growth, then you can, based on these numbers, you can understand whether the results are good or bad.
Okay,
Okay, and profit and loss statement is nothing, but it's the same thing, but it's like annualized.
okay,
Okay, so the last 4 quarters, the 4 quarters in the financial is annualized. So you get a 10-year data to look into uh, to have a more realistic pictures of how the company has performed over the last 10 years. So
okay. So what is this TTM, that trailing 12 months results? Is it or like based on current date and current month, and then you calculate it for the last 12 months, is it? The last column,
okay, that's
trailing
correct. So
TTM.
these quarter results and last 3 quarter results, you add up, like in a financial year, you add the 4 quarters results of that particular year, right?
Yeah.
But in trailing 12 months, you take this quarter and you take the other last 3 quarters. So then
Okay.
you get 12 months results, right? So
Yeah.
it's a more, out of all these numbers, it's a more forward-looking number,
Yeah.
if you
More
say.
forward, more most recent. Yeah, kind of. Okay. Okay. Okay.
Other than that, we have like compounded sales growth, compounded profit growth, stock price CAGR, return on equity. These numbers are already covered earlier, but it's just presented in a tabular format to see how the sales growth from 10 years to 5 years to 3 years. If these numbers are growing or they are staying stable, then that's a good thing. Uh, Here also the compounded profit growth and the stock price compounded annual growth rate, how the stock price is growing. So okay, so these numbers are tabulated in a way to see that whether in recent years the results are superseding in the more like 10 years average or 5 years average.
So stock price CAGR last 1 year, it's negative, no, negative 8%, minus 8%.
Yeah, because the recent because of the recent correction and recent slowdown in US economy, because most of the companies earn their revenues in dollars, right? So now if the tech companies are slowing down, the businesses, the banking sector is slowing down in US, so it will take they will cut their expenses, right? So it will
Yeah.
have some effect in the Indian IT companies as well. So for that reason, there has been some slowdown, some corrections in this stock prices of the IT companies. So that is reflected in this 1 year where we have a return of -8%.
Okay. And this dividend payout percentage, if we go, yeah, from net profit, we have EPS and then we have dividend payout percentage. So that is, so will that be an amount, or how is it calculated? What is that?
Here, like in the profit and loss statements, it's annualized. Okay,
Okay.
so
Yeah.
it depends. 50% means ultimately from the 50% of the share face value. Okay,
Okay.
so if a share face value is 10 and it is giving a dividend of 5, that means it's giving 50% dividend. But if
Okay.
the share price, the current price is 1,000, then that becomes, that 50% becomes say 0.5% or 0.05%. So
Yeah. Yeah.
though these numbers are basically based on the face value, that's why
Face value,
they
yeah,
look
correct. That's what I
uh,
had the confusion, because if the dividend payout is 59%, and if we take the current share price of Infosys, that will be like that will be like very high. So obviously it's based on the face value, right? Hmm.
yeah. So in like and the more realistic term would be the dividend yield. Okay, so dividend yield would be as per the current share price, and the average dividend yield of the Nifty 50 companies are like close to 1%. Okay,
Okay.
so so these numbers are based on face values. Yeah, that's
Okay.
why they.
Okay. Okay. Okay, okay, fine. I think so. Okay, we can stop this video here, and then maybe we can continue our discussion in the next video, the fourth part of it, the fundamental analysis part 4. So in the next video, we'll discuss on the balance sheet, the promoters' capital, and what's happening correctly. You know, the reserves and all those things we can discuss term wise. Even the ratios also we can discuss. I think that should be fine.
Yeah, so we can cover this the last part, the balance sheet, the cash flows,
The
the
ratios too,
ratio.
yeah. Yeah.
Not every item is important, but yeah, we can and the shareholding patterns, and in the next video, which will be the last video of the fundamental analysis.
Okay, sure, sure. I think sure. I think we'll cover all these details in the next video, Molloy. Okay, thanks
Okay,
for joining.
yeah, welcome, Kalyan.
Yeah, bye.
Bye.